Morning, Darshan. I'm Agam Vakil. First, the headlines at this hour. Our benchmark indices trade in a narrow range. Nifty trades well above the mark of 20,250. India VIX mildly surges in trade. And open interest in PC jewelers surges as well after traders take fresh positions in their respective futures. Auto stocks are the top gainers on the Nifty after car makers post healthy sales numbers, with all of them posting double-digit growth in March. And Reliance Jio becomes the 6th organization to commence payments bank's operations in India.
Okay, let's take a look at what's happening with the markets. Currently, if you're looking at where open interest build-up is definitely being seen, it's very important to see where positions are being built. 9,000, 10,300 is almost on the radar for the futures, and there is a whole open interest build-up of almost 30 lakh shares. Okay, the listing is about to happen. We'll talk about the F&O later.
4, 3, 2, 1, and there we go.
On NSE and MIDHANI is on the BSE. Let's see what the rates. So both, it's a terrible listing for ICICI Securities. Not so bad for MIDHANI. It's come in slight. It's pretty much near the issue price. But ICICI Securities never got fully subscribed. They had to bring down the issue size itself, given the fact that it didn't even get fully subscribed, and it's down almost 13%, managing to recover a little bit. MIDHANI is almost into the green, but nevertheless an extremely weak opening for ICICI Securities. So I think valuations were too high, 44, 45 times. Now it will be close to 40 times, but you know, compared to a pure brokerage, compared to that, you know, Motilal Oswal or an IFL trades in much cheaper. The industry had its doubt about the valuation, and they're playing out for ICICI Securities. So Agam, that's the big talking point. I think ICICI will be spoken about. I think people will talk about how valuations were valued, and MIDHANI is coming to the green now. So not the biggest IPO, but I think ICICI is definitely to watch out for.
Well, of course, we are keeping an eye on MIDHANI, especially because we will be talking to the management in just a few moments from now. But you know, as and in fact, MIDHANI is now well in the green, well above its issue price. But ICICI, of course, bearing the brunt, continuing to show that weakness that we've had in you know, today's day of trade. So not a great debut, but you know, let's moving on to the F&O queues, as Darshan was mentioning. What else are you tracking?
See, basically, if you can pull up the open interest change and the total open interest, you know, you'll get a good sense of what exactly is happening in the market. Now, if you're looking at the open interest, this is the total open interest. On the 10,300 and 10,400, there is significant amount of call writing that is happening. So there is where call writers are active. So if 10,300 gets taken down by force, you know, there could be short covering that could come in. In terms of what's happened today, it'll be interesting to see what's happened today. Even at the 10,300 level, almost 3 lakh shares have been bid in open interest, and at the 10,400, another 3 lakh shares, and put writers have put in 3 lakh shares on the 10,200. So it's between the 10,200 and 300, but at least at this point of time, if 10,300 gets crossed, I think the bulls will have the upper hand. We could see more short covering that could come in. We'll ask our experts, obviously, whether our analysis is right or no, but that seems to be what we are indicating. But Agam, on what's there on the stock side?
Well, I'm tracking some activity in Godrej Industries. Now, what's really happened is we're looking at a 12% increase in open interest, and that's followed by PC jewelers. This is on the losing end, and this is where we're looking at selling coming along. That also sees an increase of around nearly 11% in open interest. We have a lot of activity in Pidilite in today's day of trade. This is largely, you know, buying coming along, 10% increase in OI, and this is followed by Arvind as well as Mindtree. There were a lot of auto stocks which were in action yesterday, but today we don't seem to have seen a lot of activity in today's day of trade. You know, on the side of unwinding, let's take a look at that list as well and see, you know, what those stocks are doing. And you will have the likes of IGL looking at 3% unwinding. So short covering coming from IGL, considering its underlying is up as much as 3%. And other than that, not too much to speak for. We have Granules India and HDIL, and of course Infibeam, which is you know, signed up an advertising contract with one of the other broadcasters. That's up and about as much as 2.4%, and they will not be paying cash. In fact, they will be making the remuneration through warrants. And of course, Chennai Petro is the other counter, but not too much to speak for when it comes to decline in open interest. On the whole, I will be watching out for the likes of PC Jeweler and Godrej Industries today, Darshan.
Okay, so before we get our guest on the show, here's a reminder: if you have any queries regarding futures and option market, you can call us now on 022 4504 4141 or write to us on Twitter, Facebook, or with the Ask BQ hashtag. Let's welcome our F&O experts for the day. K. Subramanyam from Altamount Capital and Amit Shah from Bob Capital Markets joins us right in the studio. Good morning to both of you. Amit, I'll start with you first. Our analysis indicate that if 10,300 is broken, there could be more short covering coming in. Is that something that you're reading in, or what's your view overall?
So if I see over last 10 odd days, trading days, Nifty was testing 10,230 very closely, and it was failing to cross that hurdle. Yesterday we gave a close above that comfortably with marginal rise in the open interest by around 2% odd. Since the April expiry has started, the call writers, maximum call writers have moved from 10,500 to 11,000 strike price. So overall, I believe 10,300 can be taken off. The more it holds above 10,205, which is the immediate support, I think the momentum is poised for a pullback, where on the upside it can retest its 50-day moving average, which has been acting as a stiff resistance, which is at 10,363.
I'll just have to cut you off because the management of Mishra Dhatu Nigam is waiting by. They listed, it's a tepid listing. It's listed around the issue price only. Sanjeev Singhal, Director of Finance of the company, joins us on the show to discuss the prospects of the company going ahead. We also have Somit Sarkar from a research team joining us. Somit, take it away.
So, Mr. Singhal, you have plans to set up 2 different units. So when are you expecting these units to complete?
Yeah, as far as Rohtak is concerned, we will be setting up a armoring unit, and during 18-19 itself, we expect it to go upstream, and the production should start. As far as Nellore is concerned, we plan to set up immediately 2 units. One is with respect to manufacture of aluminium alloy. One is the tungsten powder immediately, and one is closed die forging. They should go upstream sometime in 1920. Aluminium alloy is a JV with Nalco. The DPR is under preparation, and post DPR preparation, it will take 36 months for implementation of the project.
And what is the kind of capital expenditure that you have planned for these 2 units?
Yeah, Rohtak will be, armory unit will be around 50 crores in a phased manner, and closed die forging and the tungsten powder plant, they will also be in the range of 40 to 50 crores each.
Your order book was close to 500 crores as of January 2018, but can you give us can you tell us how your order book has grown in the last 2 years, and what is the kind of outlook that you're expecting going forward?
As far as orders are concerned, orders in this sector, they take a substantial time in materializing, but we are aware with respect to the orders which are there in the pipeline. So in the financial year 17-18 itself, MIDHANI has changed its strategy against making against the orders. We have started making against anticipated orders. So whatever anticipated orders are there in the pipeline, which we are aware of, significant orders are in the pipeline with respect to defense, with respect to space. So manufacturing and order book should not be an issue over the years.
So what is the value of orders that you're anticipating in financial year 2019?
Like internally, we have set a target with respect to production in 18-19 of around 1,000 crores. So we should be having sufficient orders for achieving this target.
So you cater to a very niche kind of product. So what is the kind of growth that you're expecting, demand growth that you're expecting from these products going forward?
All the 3 products, as far as titanium alloys is concerned, special steel is concerned, and steel alloys is concerned, titanium alloys has a growth potential of around 9% on CAGR basis. As far as special steel and steel alloys are concerned, they should also grow in the range of 6 to 7% per annum. We are also targeting the commercial sector, so this should give an additional stream of revenue to MIDHANI.
So how much do you expect commercial segment to contribute to your total revenue by financial year 2019?
See, we are expecting around 3 to 5% from the commercial sector as far as 18-19 is concerned.
In the last 2 years, your revenue growth and net profit growth was close to 10%. So can investors expect the same growth rate going forward, or will it be higher?
As far as revenue is concerned and PAT is concerned, for the past 3 years, we have been growing at around 10%. So we definitely believe that this similar kind of momentum should be maintained, and with the investments which we have made in the recent past in the capital facilities and the growth and the capex plans for next couple of years, the growth rate should be higher.
Can dividend expect the same level of, can investors expect the same level of dividend payout in future, or will it be a bit lower because the company has capital expenditure plans?
Yeah, dividend we have been paying as per the government policy, and we will continue to pay dividend as per the government guidelines.
That would be all, Mr. Singhal. Thank you for speaking to Bloomberg Quint.
Okay, let's shift focus back to the options corner. Now, K. Subramanyam has a short strangle on the Nifty Bank. But before we take a look at the strategy, let's see what a short strangle means. It means when one sells an out-of-the-money call in anticipation of decreased volatility. The strategy becomes profitable when the volatility decreased, followed by contraction in option premium. So, Mr. Subramanyam, what's the strategy that you're having on the Nifty? Mr. Subramanyam, can you hear me?
Well, the Nifty, I think we are clearly seeing some sort of, yeah, I can hear you. I think we are seeing some sort of a short covering rally, and I think we could probably continue up to levels of maybe 10,300. But I would be a bit cautious beyond that, and only a strong rally as past 10,300 with accompanied by open interest will probably see the the shorts really scurrying to cover positions. But otherwise, I think 10,300, 350 could be good levels where we could see good amount of profit taking coming.
Okay, so that's the Mr. Subramanyam's view on the markets. But Amit Shah has a bull call spread on the Nifty. But before we take a look at what Amit has to say about the strategy, let's also see what a bull call spread means. So it's a strategy it's employed when one expects a moderate up move in the security, and the strategy, a call option of a certain strike is purchased and a call option of a higher strike is simultaneously sold. So now that we've explained what that strategy means, Amit, why don't you take us through how you would employ this bull call spread?
Right. So I was just mentioning that market is poised for a pullback, taking support at 205 odd. However, having said that, on an intermediate trend which is negative, this is just a pullback which we are witnessing currently. So on the upside, there are multiple hurdles. So though the pullback can be sharp enough, where on the upside 360, 450 levels can be tested, but bull call spread will help to offset some of the premium by writing a 10,600 strike and buying 10,300 call option at current levels. So the net payoff for this strategy would be around 105 points, and the maximum reward can be 195 to 200 points on the downside.
Okay, let's pull up Jubilant FoodWorks, the intraday chart. It just has managed to spike in trade. Anything it's moved up. If you can pull up the intraday chart, that will give a better idea of what exactly is happening. Yeah, so it's moved to the highs of the day. Amit, any view on Jubilant FoodWorks?
Yeah, so we have been quite positive on this counter in the previous show. Also, I'd recommended a buy idea on this. The rollovers have been quite aggressive in this counter. I feel it is just taking a breather. The more it sustains about 2,300, the stock is poised for 2,450, 2,500 levels on the upside.
All right, so that's the view on Jubilant FoodWorks. Before we go ahead and start talking about the other buzzing stocks, Amit, I'd actually like your other trading strategies in terms of stocks that you're recommending today's day of trade.
Yeah, so overall, I'm quite bullish on the consumption space and FMCG space. The rollovers across the space were quite interesting on the positive side.
Right.
Within the space, I like HUL at current levels. It's trading around 1353 odd. On the downside, it has a good support around 1330, 1325 odd band, and I believe within a couple of weeks the stock can head towards 1380, for 1400 levels eventually. My other counter is buy on Ashok Leyland. The stock has seen strong momentum consistently last over a couple of months. The stock, in fact, has seen a good rise in the open interest in last couple of days as well. So the stock is hovering around 150 odd band. The risk reward looks very much favorable. On the downside, 147 would be a good stop loss, and on the upside, one can look for target of 158.
Okay. Right. So Ashok Leyland. Mr. Subramanyam, which are the stocks that you're recommending for today?
Well, to begin with, we're giving a recommendation on Reliance Industries. There's a bull spread and we feel that consistent trading above levels of 900, we could see the upward movement continuing. So one could possibly buy 900 strike call and maybe sell a 960 strike call. So the net cost comes to about 19 and the maximum gains one could get is about 41 pips and we are also recommending a stop loss of 12.
All right, so that's a bull call spread on Reliance Industries. There's one more active stock, at least in today's day of trade, and that's PC Jeweler. It's not doing very well right now. It's down as much as 2%. We have seen a surge of nearly 11% in open interest. And of course, off late, a lot of these jewelry companies have been, well, I wouldn't say volatile, but we certainly have seen, some moves coming in. Currently, it's April futures standing at around 310. Amit, coming to you on this one, what's your view here? I know the stock is down as much as nearly 2%, but would you go short on this one?
Yeah, so definitely. Overall, the stock has violated September month's low.
Okay.
So this has been consistent in a downtrend, forming a lower top, lower bottom formation. The rollovers were also not that good. It was lower compared to its 3 months average also.
Right.
Definitely short positions have been added during the rollover week itself. I feel it can be a good short idea with a stop loss around 325 and one can look for downside levels of 285 to 280 levels.
Okay. What about Britannia? Because that counter is down 2%. Obviously, it's down on a brokerage report that's come out with an underperform rating. But if you're looking on the charts, is this an opportunity to start accumulating Britannia?
Yes, definitely. So overall, on a broader trend, the stock is poised for a very good move. As I mentioned, that consumption space should be definitely looked at. Britannia has seen very good rollovers in the April series. I think it's just taking a breather on the downside where it will witness some support, a gap support around 5,010 odd. And this can be a good buying opportunity with a stop loss around 49.40 and look for target towards 5,300.
All right. Of course, among the Nifty gainers, what we're looking at is Tata Motors now leading the charts, and that's up and about as much as 4.5%. It's underlying. Of course, that stands around 358, 359. Open interest up as much as 4%. Overall, the stock's been doing well. Let's also pull up the Tata Motors DVR if, we can get to know whether or not that's more active. No, that's not as active as the ordinary shares. So, Amit, I'm going to come back to you on Tata Motors, the ordinary shares. Up and about, a little bit of an increase in OI as well. What's your call here?
So if you see yesterday, the stock has taken a very sharp monthly support of its last couple of years lows. And if you draw the trend line, it has on a monthly pivot level. So I feel on the downside, 325 is very good support on the monthly chart.
Right.
And the more it sustains above 340, the stock can head towards 380, 390 levels, considering the pullback.
All right.
I think another stock that's looking interesting is Tata Elxsi. Has moved up. The open interest build-up isn't very, very high. Mr. Subramanyam, can you take us through Tata Elxsi? How does that look?
Well, Tata Elxsi has been our preferred bet along, and in fact it has formed some very strong base closer to levels of 950 from where we have seen some support. The near term, yes, it has seen some underperformance, but I think over the medium to long term, we could see this stock surging past 1050. So I think Tata Elxsi, Hexaware, there is another counter which stands out. So I think these are all counters which likely are poised to do well in the coming weeks.
Okay, so that's the view on Tata Elxsi. Of course, the other stock there which is up and about is Yes Bank. Now, Yes Bank has been, I would say, volatile, over the past few days, and it's made its ups and downs following, the concerns that were around ICICI Bank. Of course, it had nothing to do with ICICI Bank, but we did have some pressure on the likes of Axis Bank as well as Yes Bank, and now it's making a little bit of a recovery right now. So it's currently trading at about 318. Amit, what would you do for someone who has already bought, say, Yes Bank and is in it? Should they be holding on to this or should they book out?
So firstly, I would be very cautious with the private banks. The rollovers were not that impressive. Most of the stocks have seen short side of rollovers. Yes Bank has an immediate resistance of 323. Unless and until it's not taken off on a closing basis, one should avoid this. However, if someone who's currently holding it can trail the stop loss to 314 and hold on to the position.
Okay.
Okay, Bharti Infratel is down in trade. I think the oil marketing companies are looking rather weak. Amit, anything on the oil marketing companies? All of them have come off a cliff from the recent highs. Is this a good opportunity to start accumulating any of the oil marketing companies?
No, so see, the carnage has been done quite substantially. So I believe it's wait and watch. Should not jump the gun right now at these levels. Require a lot of confirmation, especially for BPCL, HPCL. The way it has fallen down, I would wait at this juncture and not enter into any kind of pullback.
Okay, so that's HPCL's call for you. Of course, in today's def trade, you know, we really aren't seeing too much momentum among the active stock futures. But you know, just to highlight one more, and we have some amount of activity in Arvind. That's also, you know, looking at an increase of 1%. Again, not too much change in the underlying, but its open interest has moved up by as much as 8.5%. Currently trading about 409. That's Arvind's April futures at a premium. Mr. Subramanyam, what's the view on Arvind right now? And the reason why I ask is because we are looking at a little bit of an increase in open interest. Would you advise any trade here towards the long or the short side?
Well, I think March was pretty savage month for Arvind, where we saw some very sharp correction. And going by the movement that we are seeing in the April series so far, I think this could be probably just some sort of a retracement, and I think closer to levels of 425 to 430. One would be well advised to probably book profits, and maybe one could even hedge by buying a 420 strike put. So I think anything beyond that would be a sheer bonus. I think one would be better off being a little cautious on the counter.
Okay, Sandesh has written to us. He's holding Capital First April futures at 636. Please suggest a target and a stop loss. 636. Amit, 636. Let's see what the price of Capital First is currently.
So. So it's trading around 648 odd. However, the formation is not that impressive. It has been consistently forming a lower top, lower bottom formation. He can revise the stop loss to 632 and hold on for immediate upside towards 659 levels, where he can consider to book profits.
Okay, 659 target, 632 is the stop loss that Amit is recommending.
All right, we'll move on, take the next query, and this one comes on YouTube, and it's from a user named Harpreet S, and he wants to get an intraday view of Infibeam. Well, we do have some updates in Infibeam. The update is that they have tied up with another broadcaster, and well, they will be advertising their products with that broadcaster. And well, some would suggest that this 2.7% up move in Infibeam is on account of that tie-up. Let's also take a look at what its futures are doing right now. I reckon there will be some amount of accumulation towards longs. No, there isn't. In fact, there is a decline in open interest for now. And it's currently trading at about 163. So we really haven't seen too much change in terms of open interest. But let's take a look at what one of our experts is saying with respect to Infibeam. Mr. Subramanyam, Harpreet S wants to get an intraday view on Infibeam. There really isn't too much change in the open interest today. What would you advise Harpreet should do?
Well, I think we are clearly seeing some sort of short covering rally taking place in Infibeam. So my near-term target would be somewhere around 170. Beyond that, I think it will take some more thrust really to go past that level. So I think current levels not much in terms of risk reward, not much left on the upside. So anybody holding a position, I think one would be better off booking profits closer to levels of 170.
Okay, Rajesh Kapoor has written in. He needs a view on Vedanta. 195 put for expiry. Is this the right time to buy? Amit, you go in. 195 put for Vedanta. Should he buy?
So firstly, it would be too far. Currently, the stock is hovering around 290 odd band. Unless and until it has taken a monthly support around 281 and reversed sharply from those levels on a closing basis. So unless this level is not violated, one should avoid taking any put options. If it breaks 280, then definitely you can counter in slightly out of the money counter, where one can trade speculative positions.
Right.
Currently, it is poised for pullback. I think it can see some pullback action towards 295 levels.
Okay, I think sticking with metals, Mansi Khanna has said that is it the right time to enter the metal stocks at current level? Mr. Subramanyam, can you take this? Any metal stock that looks good?
Well, current trends, I think most of them are on some sort of a pullback rally. And but if I were to look at an underperformance so far, which is a bit of a surprise, that's Hindalco. So I think one could possibly buy Hindalco. I think closer to the levels of 204, it has good support. So one could possibly buy for a possible target of 212, but a strict stop loss of 202 or 203 would be advised.
Okay, so I want to pull up the tire stocks which were doing very well yesterday, and see what they are doing today. First one was, of course, MRF, where we had seen a surge in open interest. MRF had moved up and yesterday to about the levels of 75,500, and I'm talking about the underlying. Today it's down by as much as 0.4%, and open interest is just about 1.4%. Let's also pull up CET and what that is doing, because that was the other active counter yesterday. CET, not too much change today. Again, well, we are looking at a little bit of consolidation after the big surge that we saw yesterday. And Balkrishna Industries, which was the other stock which was surging. And today we have, again, an increase in open interest, but this time, well, on marginal moves. Amit, I'm going to come to you on this one. Anything that stands out for you among the three stocks that I've just mentioned?
Yeah, so in fact, all these stocks have showed a good amount of strength since the rollovers, which was strong enough. Out of that, I would not bet more on CET. It is witnessing some kind of a pullback. But definitely in a strong trend are MRF, Balkrishna Industries, and to add on to Apollo Tyres as well.
Okay.
So if I just talk about MRF, it has given tested 3 times around 7,400 and 200 odd, and it has given a breakout above that with good volumes and open interest.
Right.
So I think the stock is entering to a non-charted territory where it can see further 5 to 7% up move.
Right. Okay.
Okay, let's pull up Indigo. Indigo has managed to inch up. It's trading at fresh record highs. Amit, do you like Indigo's chart?
Yeah, definitely. It has given a very good breakout around 1350 odd, though the risk to reward right now at current juncture would not be that favorable. But any dip towards 1380, I'll encourage to give a long idea on that with a target towards 1450, 1480 levels on the upside.
Okay.
All right. Well, moving on, we have more queries coming in. So we have Parth Mathur. And he wants to know if it is a good time to, take a trade on Hero MotoCorp, and I'm assuming this is towards the long side. Oh, okay, he has a 1-year horizon, so this certainly is an F&O query. But, we'll just take a short-term view in any case. Let's take a look at Hero MotoCorp. It's currently trading at around 3,675. Very little change in open interest, and it's the same for the underlying as well. Mr. Subramanyam, do you have a view on Hero MotoCorp, and what would you advise Parth to do? And, if you could actually offer him a long-term view as well, if possible, considering he's spoken about a 1-year horizon. Okay, I think we've lost the line on Mr. Subramanyam, so I'll just take this query to you, Amit. What do you make of Hero MotoCorp right now?
So if he's considering for a 1-year horizon, definitely the broader structure is very strong. Unless and until it is not violating 3,400 levels, the biasness remains positive.
Right.
On a short term, it has witnessed some sharp pullback. The moment it starts hovering above 37.25, I think it can see good momentum towards 3,900 and eventually towards 4,000.
Right.
Over a longer term perspective, definitely he can look at a better risk to reward perspective. So 3,400 would be the stop loss, and can look forward for 4,200 to 4,400 levels on the upside.
All right. So that's the view on Hero MotoCorp. Again, currently trading with marginal gains, but I think we've run out of time on this show. So I'd like to thank both our experts, Amit as well as Mr. Subramanyam, for joining us and taking us through their views. It's a wrap on this edition of the F&O Show. So don't go anywhere. We're wrapping this one up, but there's lots more lined up, so stay tuned in a Bloomberg Quint.